no fewer than 10 FTSE 100 heavyweights are due to report their full-year results in the week ahead, accompanied by a handful of mid and small-cap names. Reports that may be worthy of further note for what they say about the company, their industry, or the economy more widely include Intercontinental Hotels, Coca-Cola Euro-Pacific Partners and Springfield Properties on Tuesday the 17th, BAE Systems and Pan-African Resources on the 18th, Centrica and Mondi on the 19th, and to finish real estate investment trust Segro on Friday the 20th. But we also have reports from no fewer than 4 miners, and it's the diggers who are likely to dominate the headlines in the shape of Antofagasta on Tuesday the 17th, Glencore on the 18th, Rio Tinto on the 19th, and Anglo American on Friday the 20th. Now, over the past year, the precious metals and mining sector ranks first out of the 39 industry groupings within the FTSE 350 index, with a gain of more than 200%, thanks to that big surge in gold and silver that we've seen over the past year, even allowing for the recent turbulence. But the industrial metals and mining sector has also been no slouch, with a 46% advance, and that's enough to rank it 6th out of 39. Shares in Rio Tinto and Antofagasta both stand at new all-time highs, and those of Glencore and Anglo American are both approaching their previous peaks. Merger and acquisition activity has helped boost sentiment, even if BHP's bids for Anglo American in 2024 and then another look in 2025 came to nothing, and talks between Glencore and Rio Tinto have just collapsed again. Anglo American's also spun off Valterra Platinum, and it's looking to sell its diamond, steel-making coal and nickel businesses, while Glencore's in the process of selling a 40% stake in its operations in the Democratic Republic of Congo as part of a deal to supply the USA with critical minerals. Russia's attack on Ukraine, COVID and lockdowns, and China's Belt and Road strategy have also all focused attention on the importance of supply chains and access to natural resources. Add in a weaker dollar and hopes for reflationary plans in the USA, China, Germany, Japan, and others, thanks to looser fiscal or monetary policy or both, and commodities, well, you can see why they have been a hot topic. This is reflected in raw material prices too, with copper, platinum, and tin, as well as silver and gold, having reached or set new record or multi-year highs. Now, even so, there's a wide range of performance amongst the metals thanks to supply, demand, geopolitical issues, and even issues such as local taxes, geology, and weather. So there can be a wide range in a miner's operational and share price performance too, depending upon what they produce and where they produce it. Glencore is also a bit different again because of its substantial metal, mineral, and oil trading activities for good measure. Each of this quartet of miners has already released production numbers for 2025 and guidance for 2026, so attention will really focus on 4 different things when these figures come out. First, the profits they report for 2025. They're not likely to give profit forecasts just because of the commodity price volatility, but in aggregate, analysts expect earnings based on the metric of earnings before interest, taxes, depreciation, and amortization, or EBITDA, to come in broadly flat in the year just ended, an aggregate of $49.7 billion across the 4, and of an increase of around a fifth, according to analysts, in 2026. Second, they'll be looking at commentary on production costs, capital expenditure for 2025 and 2026, and the development of or progress at any new major projects. Overall, analysts don't expect major hikes in spending in 2026. Thirdly, plans for dividends and any share buybacks. Analysts expect a big jump in the payments at Antofagasta thanks to the buoyant copper price and a big drop at Anglo American thanks in the main to the platinum spin-off. But all 4 miners are forecast to substantially increase their distributions in 2026. On the buyback front, by the way, activity was relatively subdued in 2025, with only Glencore having run a program of any substance of any kind. And fourthly and finally, look for any insight on corporate activity. Anglo American is in the process of merging with Canada's Teck Resources, and it's still seeking to sell off those non-core assets, while Rio Tinto is still in the process of digesting last year's acquisition, Arcadium Lithium. Hope that you and your families are all keeping well. Thank you for watching, and I look forward to seeing you again next time.